Taiwan possesses global market leadership in high-technology goods and has significant investments throughout mainland China. Jack Chang, CIO and EVP of HSBC Investments Taiwan, says the bank's Taiwan Fund is the best way to tap into the country's dynamic economy, as well as other emerging Asian economies and neighboring giant China. Chang recently spoke to Global Custodian at HSBC's New York City headquarters.
The fund is currently positioned for two major drivers. One is the re-rating in Taiwan based on greater degree of opening in interactions with China. And the second key driver that the fund is positioned is it's gearing to domestic demands in China, not necessarily re-exports of manufactured products from China, but domestic demand.
This March, Taiwan lifted a specific ban on Chinese investment, meaning banks could take stakes in their Chinese counterparts via overseas subsidiaries.
The market domestically in Taiwan is quite saturated. It's a fairly developed financial market. So one or two exceptional cases have been made before where very few banks were allowed to set up businesses in, for example, Hong Kong. And if they are allowed to have more freedom to expand in China, it would mean very significant opportunity for them in terms of new number of clients, as well as much greater base of revenue in the future. So that's why in the portfolio we are overweight the financials.
Chang says that Taiwan-Chinese relationship is key to the success of the Taiwan market, which he says is currently experiencing unprecedented growth.
Taiwan being part of Asia, and the trade with China now is much greater than with U.S. So I think the source of demand for Taiwan export is much more diversified than it has been in the past. It's one of the cheapest in Asia, even cheaper than some of the emerging markets in Southeast Asia. And it has underperformed the rest of Asia for many, many years due to some sort of a political discount.
But where government support to the growth of Taiwan's markets lacked in the past, the country's presidential elections this year could prove to be quite advantageous.
The presidential election, we think, will bring quite a number of changes in three key areas. One is direct transportation linkages with mainland China and tourism, exchange of tourism. Number two would be relaxation in terms of how Taiwanese corporations can invest in China. And number three would be the inward investment from mainland China into Taiwan. May they be investing in stocks or investing in physical properties. So in all those three areas, both of the presidential candidates have very high degree of agreement. So either one who gets in the office will implement a fairly similar policy.
Whatever the result, it seems 2008 could be the year of positive change for Taiwan.